Yeah, I think that's a big question. The most important part to me is I think the speed of the exit. I think it's pretty much a consensus view right now that they're going to start removing some of the QE. I think the pace is probably the most important part. That's number one. And then the factors that feed into that are going to be primarily, in my opinion at least, developments in the employment situation and developments on the inflation side. So inflation's been pretty steady, sub 2%. I think that's probably set to continue. And I think that sort of gives them a little room to maintain an accommodative bias for a little longer if they need to. And the employment situation seems to be shaping up. So if that can continue or get a little more aggressive, i.e. a stronger labor market, maybe they're more aggressive in removing QE, which is going to support the dollar. So I think you want to watch the upcoming data, and that's going to put in your mind a view for if the Fed's going to be a little slower to remove QE or a little faster to move QE, and then the dollar will react accordingly.
George, what currencies will the dollar perform best against this year?
Yeah, so it's boring to say, I think, but I'm really more focused on the euro and the yen than anything overly exotic. And I think that there's going to be two different ways that those play out. But my view is you probably want to trade the dollar strong trade against the euro. In the run-up to the European parliamentary elections in May, I think we could see some euro weakness. My personal view is we can get down into the one, sort of 115, 118 level, and that's from, kind of the high 130s. Which I think is a pretty aggressive move and probably non-consensus. The technical setup in that market is slightly long of euro right now and maybe a little bit short dollars, which could add some fuel to the fire. The other one is dollar yen. Dollar yen's had a pretty aggressive move up. I think we can go higher, but I think we're going to have to unwind some of the long dollar yen position first. So to me, that's going to be a little bit of a two-way trade from this kind of 103, 104 level. But personally, I favor up towards 115, 120 towards mid to late 2014. And again, the background for that is just like I mentioned, that we're going to see some semblance of tighter policy out of the United States, and I think we're going to see sort of maintaining an easing bias or general ample liquidity in Japan.